All right, hey there, everybody. Welcome, Christopher Franks with Texas West Capital. It is about 10 minutes after 11 a.m. Central Standard Time here on Friday, the 12th of November, 2021. Can you believe it? Man, oh man, if you're in the U.S., that gives you about 2 weeks till Christmas, right? No, yeah, it's about 2 weeks till Thanksgiving, but those of us over here, we know how that goes. Heck, they've already got their Christmas stuff up, and it hasn't even been Thanksgiving yet. It's absolutely crazy, man. I remember back in the day when Black Friday used to mean something, and I've been getting emails from all the stores about Black Friday, pre-Black Friday, and all this stuff. So sometime in October already. So it's just been absolutely crazy, guys. Man, the rest of this year is just kind of flying on by. As usual, Bitcoin's hitting another new all-time high, and it's pulling back, and everybody's all emotional, saying, "Oh, that's the end. It's done now." I don't think so. Not yet. I think it's just a pullback. So we'll talk about that. The dollar this week, man, jumping up on that CPI data, guys. They had that CPI number takes it to the highest it's rallied there in 30 years since 1990, and if you strip out I believe it said if you strip out oil and food, I think it's been the highest it's been since 1991. Either way, it's been just a huge put up. So I don't know how the Fed doesn't, raise rates prior to when they're kind of expecting to do it. They keep pushing back, but I think they know they have to do it. I've been talking about this, for the last year, that come, 2023 or so. They're going to have to put it up there early 2023. Going to have to probably raise those rates, and so it's looking really a lot. It's really looking a lot like it right now, with that going on. And the Fed, I think the Fed's just in a tough position. I think as I've been explaining, that they've been painting themselves in a corner here with all this stimulus they've been doing at a time when they're also doing they did the mortgage and the rent and student loan moratoriums, the biggest things that people normally have to pay. So they don't have to pay their largest bills, and yet they still have money coming in, and then they're sitting at home because of the pandemic there, so they're sitting at home just kind of looking up Amazon, what can I buy here, and so, you've got these price increases as a result. And again, the only thing the Fed has to be able to do is to what it does when CPI is running hot. You raise rates. It makes it more expensive to borrow money. If it becomes more expensive to borrow money, then you kind of stop borrowing as much money. And so again, remember the real money creation doesn't come. Everybody's so frustrating. Everybody thinks that if the Fed's printing, all this money, that it's coming out into the, that it means that everything necessarily has to go up, that it's out there. But remember, it doesn't actually, the Fed cannot directly put that money into circulation with us, guys. It has to go through the banks. That's where the real money creation happens. And so, just because the Fed prints money doesn't mean that it enters the broader market, or that all of it enters, or even that a large part of it enters, depending on what you're looking at. Even when it buys treasuries, it's still buying them via open market operations, which is by law what's required. They still have to go through the banks. The banks have to facilitate this process. So this is kind of where we're at here, and so with the CPI running like it is, what do you think? The Fed's just going to sit on their hands for the next 6 months, 7 months until taper completes? Next summer. They're looking at $15 billion reduction each month. So starting this month. So it would if they just stayed on that track, it would take till next summer to completely taper all the what they've been buying. And then what happens? Now you got all these companies that were depending on the Fed continuing to buy their corporate debt, and they're no longer doing that. So if you get that, you have all the moratoriums, which have, they're at the end of January. The student loan moratorium is going to end. So people are going to have to start paying their student loans again. I think we're going to start seeing the foreclosures kick in 2022. Because remember, they kind of had that moratorium on rents and whatever, and then they kind of lifted that for most places, except for the places that were hard hit by COVID, the Delta variant, which they kind of kept it there. And so I think, all this is going to start playing out come 2022. You're going to start seeing those foreclosures kick in. And what does that mean? That means the banks take back the properties and then they have to sell them. Well, they're going to try and sell them, but they're going to end up selling them for less than what they were valued at, right? So there you go, depressing prices on houses. And then of course, like I said, if these companies no longer have the Fed, these zombie companies no longer have the Fed supporting them, by buying their corporate debt, well, all of a sudden they're not, they weren't doing what they should have been doing anyway. The only reason they were still around was because the Fed was doing that. So the Fed stops doing that, they go out of business, people are out of work. You see how this becomes this big, huge thing, and it all contributes to further and further pullback. And the Fed, for their part, they're like, okay, well, inflation's running up, the price inflation, the price increases, and all the other stuff's happening, but they can't keep, they can't lower that interest rate anymore, and they can't hold off raising it because then inflation, the price rising keeps increasing. So they have to do that. So they slow down, so it results in a slowdown of the economy in a situation where all the artificial holding up that they've done is no longer out there. And that's just a lot of negative pressure, guys, on the economy. So, I think that's kind of what we're looking at. I think we're kind of coming to a head now. So, yeah, we'll take a look at that. I didn't mean to get into a big old head thing there, but, a big old explanation there. But, there's so much to it, The thing I find most online is, especially in terms of the dollar, in terms of how the money creation actually happens, people are into sound bites. Money, printer, go burr, right? And to them, that means the Fed's printing dollars that they think are going out there into the broader economy and competing for the same limited goods, right? So their brain is all on this soundbite, but the process itself is actually much more intricate. It's much more. You have to understand how the PMs and in these banks and, the treasuries and the government spending and how all that kind of comes together to understand where that money actually goes and where it's sitting. To basically put it out there, the money goes either to the government through purchasing treasuries, or it goes to the people through loans created by the banks. So the Fed prints the money, sticks it in the reserves, so the banks can then use that to reference to say, hey, look, we got the reserves required by law to make the loans. So that's where it is. It's not the Fed prints $1 and says, here, Chris, have $1. No. He says, here, bank, have $1. Here, government, we're going to pay you, all these dollars for those treasuries. But we're going through the bank here, obviously. Again, your prime dealers. And it's really just a bunch of asset reallocation, guys. It's just, the treasuries come in and then they, the primary dealers get the treasuries and then they sell it to the Fed, who then, sticks it up there in the reverse repo because these guys have all this cash that's sitting there in this area, not in the broader economy. It's just sitting there with the banks and those primary dealers there, and so then they put that in the reverse repo so they can get that little bit of interest over there. And in exchange, they get those treasuries to hold, and then they give the treasuries back and they get their money back. And, this is how it goes. But it's a very, there's a lot of moving parts in there. It's not as simple as money printer goes burr. And I'm going to tell you guys, I've warned you many, many times about this. So hopefully you're listening at this point. Stop with with the sound bites. Stop with the sound bites, especially when it comes to complex things like global finance and macroeconomics. Just, step up and say, listen, I don't think I know what I'm talking about. And then go find it out. There's so much information, guys. Gosh, there's so much information today compared to when I first started, back in 95. Just the amount of information at your fingertips now is crazy. But, again, with that, the difficult thing is trying to get beyond the half-truths and the outright lies. And so, that's the hard part there, but the information's out there. It is out there so much. But it'll definitely help your understanding of the markets. So, anyway, let me see here. Who's here, guys? Let's see. Crypto Mowgli, what's up? Ventru is here. Boris is checking in. White R21, I'm doing great. Thoughts on the Rittenhouse trial? Oh, come on, man. You don't want to give me thoughts on that, do you? I'm going to keep those thoughts to myself. Because, that's not what we're doing here. And that's going to get everybody off into their into their own little conversations about things that aren't really relevant to what we're doing here. Let's see here. Christopher Artsky. I guess you're thinking that 69 is the top? I wouldn't say that. Yeah, USD CAD ran up this week. Sure did. Yeah. And of course that being with the oil dropping and the dollar rising. So, just a double whammy there for the USD CAD trade. So, was a good long for a while there. May be done, may not be done. Good times, right? It's at the kind of at that area right now, that kind of do or die area, I think. Hey there, Devin. Good to see you. Headars here. Tell you, Ryder, what's up, man? Let's see. Bianca checking in. Love when you check in. Chuck? Who's Chuck? Data, Brian Riley, what's going on, guys? Just in time says, I think the volume in PA surrounding sweeping the low of November 10th looks good so far. Yeah, you can talk about Bitcoin. Yeah, we're going to take a look at that. I've got a couple of different ways of looking at the local area. It's crazy, guys. When you've got all that up and down just overlap, it kind of presents itself a few different options. And so it's good to just kind of look at there and get a look and kind of figure out, well, what may be going on. And then note the larger invalidation and validation levels. That's what it's all about. When it comes to trading, guys, it really is. It's all about your validation and invalidation levels, coupled with proper risk management. So, yeah. Hey there, Keith. Good to see you. Venture says the Christmas creep is real. TV Canal says he believes that this pullback is to fill in the CME gap. Yeah, it may fill it in, but it's not because there was a gap there. Again, the weekend gap. It's not something that that's special or anything. So it's not something that it's not like those other gaps in which when they happen, price will usually come back and fill it in. Weekend gaps are just Sometimes they get filled in, sometimes they don't. There's no like, 80% of the time they get filled or something. Yeah. So we'll see what goes on there. What's going on, Hank? Had to manage a few positions. Yeah. A little bit of movement here. Matty, good to see you, bud. Andrew Bennett checking in. He says DXY gets a boost after inflation numbers. Yeah, it sure did, man. It sure did. He says weekly current candle a concern for Bitcoin. Well, I don't know. It's not the end of the week yet. But remind me in a minute here if I forget to check it, and we'll take a look at it. Let me see here. Andrew says that SEC hasn't delayed the spot ETF on Bitcoin. Maybe it's a go for Monday. Man, right now your guess is as good as mine right now. They haven't outright said, that no, it's not going to happen or anything like that. So, there's the possibility there. The SEC is really kind of known for dragging things out. But, I don't know. I think maybe I don't know. They let the other ETF in there, but that wasn't spot. So it really, yes, they're both Bitcoin, but one's, futures and the other one's actual Bitcoin. So I don't know, that could cause them to drag it on a bit more, but I think in spirit they're at some point here, if not Monday, sometime probably sooner rather than later, they're gonna allow that spot in there, I think. So yeah. Hey there, Claudia, Crypto Girl, good to see y'all. Let me see here. It says knowledge and risk management is the key. That's right. Oscar, what's up? Oh, okay. You're saying that the SEC did decline the spot ETF from about 30 minutes ago. Well, look at that. So there it is. It's hard to keep up with the news that happens right away when I'm getting ready to do this with y'all. So good to see you checking back in, Oscar. Mike Slane is here. Happy Friday, my friend. Blaze checking in. Joe the Butcher, what's going on, man? Let me see here. Any thoughts on SHIB? Not a long hold, but if you need to keep your eye on it. Remind me to check that out here in a bit. Last time I checked, it was doing what we were looking at for it to do. It had bounced off the demand structure EQ area. But, again, I was talking about either it was going to continue from there or kind of pull down lower to another target. And I haven't looked at it, honestly, recently. So, yeah, remind me to check it out here in a bit, and I'll check it out. Alan, what's up, man? He says Americans are loving their credit cards again. I don't know if they're loving them or if they feel like they have to, which is kind of crazy because you have lots of information out there, guys. You got some pundits in the media saying, I think I saw one headline from a media source saying that Americans were flush with cash and they weren't worried or something like that. And then we get this other one talking about the increase in the credit card usage and whatnot, which isn't necessarily a great thing, if they're flush with cash, why are they using, credit cards? But with Zillow doing its thing, we go back to what I was talking about at the beginning with the mortgage moratoriums and everything, and then Zillow now offloading 7,000 plus properties into the market. I mean, there's already going to be a depression of prices as a result of that, most likely. And that depression of prices, how is that going to affect the other iBuyers out there like Redfin or Open Door and stuff like that? Again, they're buying, with the expectation they're going to be able to clean it up and sell it here a little bit higher, because of the way the prices have been going. But if they're still buying high now, Zillow potentially the canary in the coal mine. It's kind of saying, hey, look, there we go. And then it's going to dump its houses on the market, which drops prices, which makes it, which kills the profit that Redfin and the others were looking at. And if it doesn't enough, I mean, next thing you know, they're out of business too, right? And then we got even more properties hitting the market. These are the kind of things you guys got to look at there. Let me see here. Chum in the water, what's up, Aces? Valkyrie says spot ETF unlikely until mid-2022. Yeah, that sounds about right. Here's the thing. Again, we talk about, the idea of is the bull run going to end in December, or is it potentially going to last into Q2, maybe Q3 of next year, which is, right around that late spring, early summertime. And so, I've already talked about some things that could make that extend. We've got Ethereum doing its thing, next year. We've got the Fed right now with the tapering that's, at 15 billion a month is supposed to end, we'll finish tapering there around summer of next year. And now we're looking at this, which means, again, when you're looking at interest rates, right? The idea the Fed wants to not raise interest rates until they finish taper, right? Not do the two things at once, which, again, I'm not so sure they can get away with that CPI number this past week. But, there's a couple of reasons there. And then now you look at, like we're saying there, if we're going to get a spot ETF summer of 2022, I mean, there's yet another reason why we could potentially see the bull run continue into that time. And then when all that kind of hits, just kind of come down. So we'll see. Hey there, Yafback. Good to see you, man. Glad to see you checking in. Peter's here as well. Crypto Gross says, not sure if prices will drop on the coast. Wishful thinking over there in California. I don't know, man. Y'all are off in your own little world over there. I love you, Crypto Girl, but man, your government over there is off in its own little world, with everything else. So we'll see. Hey, listen, guys, you can join us over here at howtradetowin.com. We'd love to have you there. Let me pull this up right here. We've got a special going on at the moment. Where am I at right here? Here we go. So if you jump over to howtotradetowin.com, you can go to the tier 3. The quarterly that we have there is already reduced. As I said, normally you pay $199 a month for tier 3. And I'm going to tell you right now, you're sitting here going, oh, that's ridiculous. No, it's not actually. It's actually quite low for the amount of content that we put out. But anyway, and the quality of content. But anyway, what we do is we give you a discount if you're buying more months at a time. So quarterly, biannually, annually. So you're already getting a discount to buy quarterly, but now you're going to get 25% more off that. So it's only going to last this next week here. So jump on it while you can. If you miss it, you miss it, guys. That's it, all right? So we'd love to have you in there, howtotradetowin.com. Man, you're going to learn more in that 3 months. If you pay attention, guys, you are going to learn more in that 3 months than you would in the next 2 years on your own. I promise you that. It's that much content. It's that much education. So check it out. By the way, we're also doing some giveaways here, guys, right? So our first giveaway is this one right here. I'll go ahead and bring this up. And then I'll go ahead and post this in here. If you guys have not entered, enter, man. So the first prize is $1,000 in Bitcoin. Second prize is a PS5 with the Spider-Man Miles Morales and Ratchet & Clank Rift Apart games, as well as an extra controller. So you can see it. Oh, that's the wrong picture up there. Oh, this is the fourth giveaway. What is this? Yeah. That's the wrong picture up there. What the heck? I'm going to have to go in there and change that. So I'll fix that here after we're done. I don't know why it pulled that picture up. Anyway, but I got another picture that has the other two games and the controller there with it. So you'll see. Again, remember, guys, if you are not a U.S. citizen and you win the PS5, obviously it doesn't work where you're at, so I'm going to give you the 6-month Tier 3 membership. So worth its weight in gold and probably more there. But if you're a U.S. citizen and you win the PS5 and you'd rather have the 6-month Tier 3 membership, I'm going to do that for you as well. I'll give you the option there. We're also going to give away an annual Tier 3 membership and a 6-month Tier 3 membership, guys. By the way, you can also win this is a separate thing I'm doing here, $250 in Bitcoin. And so you can do that by just sharing, where is it? This tweet right here. So let me kind of get this for you. So you have to share this. Make sure you're following me, share this, and like the this right here. So like it, share it, and then like I said, make sure you're following me there. Just follow the rules. Follow me, like and retweet the following tweet. There you go, and that'll give you what you're looking for there to potentially win $250. So all this stuff is going to be drawn next Friday, guys, the 19th. So yeah, the day after my birthday, the day after I turn a year older, or is it a year younger? Never figure it out, right? I'm out of my USD yen trade here. I had 78 there. I got out at around 95 pips. So, pretty close toward the top there. But I'm out of that at the moment. And we'll see. I think we might be getting ready to go long here again. So we'll check with that. Again, as I mentioned, CPI rising faster than it has since 1990. Litecoin, man. Litecoin hit 302, guys. Ethereum hit about near 4,900. And then, of course, USD yen was up about 100 pips, and that was over there on the 10th. So a lot of good stuff going on there. Let me see here. By the way, it's this tweet right here that you have to do, okay? It's not this tweet. So I might have given you the wrong one here, guys. It's this one right here is the tweet that you need to like and share. So make sure you get that. It's that one. But yeah, you just had to follow directions there. Yeah, it says follow me, like, and retweet the following tweet. This one right here to do that. By the way, guys, hey, listen, Pump and Jack Flash won the $100 last week. I'm giving away $250 this week. They won the $100 last week. I was scammed, guys. I was scammed. I thought I had done enough verification of the individual. They contacted us on our Discord. And I was busy doing other things as well, and I just missed one step. And so I sent $100 to somebody who didn't deserve it. But anyway, no love lost, no hurt feelings on my side. I hope they really needed it, and I hope it goes to help their family. Probably not, but hopefully it does. But anyway, here's the big thing, man. And I wasn't going to mention this, but I think it's very important. I always talk about character here. I always talk about the way you view the world and the way you treat people and why it's so important. Pump and Jack Flash, I explained to them what happened when they contacted me and let me know, and I said, oh man, I guess I gave it to somebody that scammed me here, explaining what happened. Their response was, listen, Chris, you don't have to send me the thing. They said, listen, the knowledge that you offer us is well worth more than that will ever be, and so don't even worry about it. You don't have to send it. Man, I'll tell you what, I was not expecting that. But this is the kind of character that I talk about, guys. This is the kind of character that sets you apart from everybody else in this world. This is the kind of character that means something in this world, And so what did I do? Well, I sent it to him, plus an extra $100. I sent him $200 in Bitcoin. Because to me, character like that, the world rewards character like that. You may not always feel like it, but if you are a great human being, if you are a great person, and you're constantly trying to make the world a better place. You take charge of your life. You don't play the victim. You understand that you have control over, that things are going to happen, but then you're going to make mistakes, but then you move on, you do it. You treat people with kindness and respect. Man, I'll tell you what, that kind of thing in life gets you places. And so, yeah, so instead of 100, they got 200. So I gave 100 to a scammer. It just goes to show, man, no matter how careful you are, you're still going to get scammed sometimes if you're not paying attention fully. And then, of course, them with the 200 there. So I just say that, guys, it's not about me. it's about them. It's about Pump and Jack Flash, man. Again, that kind of view of the world. I can't. It feels like I can never explain it enough what I'm talking about when I say, it's character that defines you. It's not that hard times create character. It's that you find out what kind of character people have in hard times, okay? And not that this was a hard time here, but I'm just saying in general when it comes to character, it's such an important thing, how you view the world and how you treat people. And that's just my thank you to them for being just an amazing person. So, yeah, there you go, guys. So completely all about them. And really, please, that is nothing about me or whatever. So, yeah. All right. Let's see here. Let's jump on over here to Bitcoin, kind of see where they are. Karma, man, karma can be that can be there. That's right, man. And I don't even think, again, when it comes to karma, the way I think about karma is that, you manifest, you bring to you this. It's not that there's some kind of otherworldly force out there, bringing bad things to bad people, bad actors, right? I just think that when you act a certain way, it brings to you those same kind of people. It brings to you, it opens your eyes to those things that you can see. So if you're a good person, in other words, making, like Pump and Jack Flash there, and you view the world differently than most people do, I think it just opens opportunity. You see more opportunity. And if you're this person who acts in a sneaky and derogatory manner and whatnot, it just brings those same type of people to you, which means that the odds of that same kind of thing happening to you are obviously increased. So I think that's all it is. But yeah, definitely. Where's your money? But yeah. Let me see here. Hey there, Telltale. Good to see you checking in. I appreciate you guys. Again, I appreciate the kind words, but really I didn't mean this to be about me, and this is why I wasn't going to say it originally, but I just think it was so important because to let y'all know about this, because Pump and Jack Flash kind of really epitomizes what I think people should be in this world, how I think they should view the world, how I think that if you do it, your life becomes that much better. It just draws to you those same kind of people and creates the opportunities to do better, to do more. So, yeah. All right. So, anyway, let's jump on here to Bitcoin, guys. Talked about a lot already this morning. Let's see here. So, I've got a couple of ideas I'm looking at here, all right? So, we dropped down below the swing low right here this morning, which invalidated the idea of maybe a 1-2 here. So, leaving the count as it is here, what we're looking for, again, this has us here as this 1-2, and then a 1, a flat as a 2, and then 1, 2, 3, 4, 5 gives us a 1 up here, right? So what are we looking at? If price drops below this parentheses 2 here, swing low at 61.25. If it drops below that, then I think what we're looking at is this red count here, which says that this is maybe one large, that wave 2 here is still in progress, as maybe a large flat correction. And if that's the case, initial target is this 55,600 kind of area. Secondary target 53,700, 53,750 kind of area here. But that's only if that happens. Because here's the thing. I have this other count that I'm looking at right here, locally here. And this one suggests that maybe there's this, let me see here. Did I get this right? I might have screwed this up. Let me see here. Wave 3. 1. What was I looking at here? I had a count here. It's not obvious. I've got it labeled wrong here. Let me see. Oh, this is what it was. Maybe. Let me see here. Yeah, here we go. Discord, I'm sorry, I'm going to have to update this for you. But basically, we were looking at the possibility of this being ABC, ABC, and then, so A, B, C here as like a running flat kind of correction here. And then we get this going up here to like potentially a 3-4 kind of area here. And then this gives us a 5, so a 1 here, and again another flat here. So A, B, 1, 2, 3, 4, 5, finding support right here at about the 50% retracement there. So yeah, I was kind of off on that. Yeah, either that, or I guess maybe you could even look at this kind of like this. So a 1, so a 1, 2 here, and then a 3, 4, and then a 5. But nonetheless, basically the idea being that we've got a 1 with a and a B and a C here as a flat correction, right around the 50% right here. So what are we looking for this? So if price breaks out above this descending channel resistance here, that'll be the first clue that may be correct. And that's going to give us a pattern target here of about $5,618 or so above the point of breakout based on the height of this, this channel here. Taking it out above wave B up here at 69,000 is going to add confidence to the count and have it going up there. I can't believe I screwed up that labeling there. Oh, good times. Going on there. It is what it is, right? But anyway, so yeah, so that's kind of what I'm looking at there. So we're looking for a breakout of this descending channel resistance that carries price above wave B up here, or we're looking for a breakdown below wave parentheses 2 here at 61.25. That's it. We'll just put it simple like that to get that in there. So yeah, I mean, not a whole lot else to say about that. Yeah. Somebody wanted to look at the weekly, right? Let me check that weekly candle here. Yeah, it doesn't look too pretty at the moment. But it doesn't necessarily mean it's the top. Again, you can see this one right here, right? So we've still got, what is this? Over 2 days, almost 3 days here for the rest of the week. So, we've got about a quarter of the week still left. So we could see this rally up, especially if that's the low there and we'll rally from there. So this could actually close up much, much better. We're about 3 days out, 2.5 days out from the end of the week. So I think it's too early to really make anything of that weekly candle. But again, even if it does end up like this or something similar, we had this one right here. So and then we went up to a new higher high. So again, it shows you that it may not necessarily be the high. You need to have follow through. So like if this was to be a high here, you needed to have this supply spread candle coming in following to kind of confirm it. Otherwise, it's just a pause. And if we look at this one right here, it's finding support right now on this weekly R3 pivot. So that, that's something big there. Resistance prior to it. And it pulls out and then it comes back and maybe finds support on it. So that's what I'd probably be watching there as far as that weekly goes. But yeah, I think too early right now to kind of determine that, the weekly's, finished or whatever with that. Let me see here. Let's see here. I'm not sure what you're saying there, TV Canal. I think you're saying why they will do a reversal pattern. I think we will even not drop under 57,000. Okay, so you're looking for a further pullback or just a rally off of the current area? Because you were talking about my bigger possible count. Yeah, this one right here, this A, B, C thing. Yeah. Again, this is only if it doesn't drop below there. But again, if we find support here on the pivot and just starts rallying back up through that descending channel resistance right there, again, and pulls up above wave 4 here. There's your first big clue there, getting through that area. And then you're getting above wave B up here, and that kind of confirms it to head up higher there. So, definitely, definitely some, some possibility for some upside here. But, again, as guys, I see y'all still often jumping in way ahead of confirmation. Y'all are still so fearful of missing out. And the problem, again, with that is that it gives you a problem. It is a significant problem because, if you don't have confirmation, then you don't know whether it's going to break out or not. And most of the time, it doesn't, right? So more than 50% of the time, it's not going to actually continue. It'll pull back. It'll be like a fake breakout. And it'll be because maybe, you had the wrong channel on there, or you had the wrong resistance level you were looking at, whatnot. It wasn't the one that you needed to watch. That happens to me still sometimes. As I noted, guys, I don't want you ever to think that I always get it right. I don't. And nobody does. Nobody does. And especially the lower down you kind of zoom in on your charts, the more likely you are to be wrong. But that's why the validation, invalidation levels are so important on them. Because, you can watch a range and go, okay, well, I think it's going to go up or I think it's going to go down. But until it actually breaks out of that validation or invalidation level, there, you're just kind of guessing at that point. So that's why those levels are there. If you guys really spend time doing that, you're going to be so much better off. A lot less losses because you wait for actual confirmations to happen. So yeah. Let me see here. TV Canal is just really on this whole filling in the gap thing. Yeah, it may, but again, as I've tried to explain, weekend gaps are nothing special. They're just weekend gaps. It's just because the market wasn't open at that time. And so in a 24-hour market, that gap doesn't exist. And then there's the difference with it. So it might come back, but it doesn't come back in to fill the gap. It just pulls back because that's what it's doing, is pulling back in that particular situation. Now, again, there are other types of gaps in which you expect it generally to fill, and others that you don't. Acceleration gaps you usually don't expect to fill because of what they are, of the reason they're there, the reason why they happen. So kind of like the weekend gap. It's just a common gap. Nothing special about it. So yeah, but it may go back that far. Sure, maybe. But again, it won't be because there's the gap there. I know it's hard to wrap your mind around sometimes if you don't know a whole lot about gaps and how they work, but that's usually the way it is. Anyway, what's up? Is that Ollie there? What's going on? Good to see you. Let me see here. Leighton, what's up, man? He says, on the high time frame, do you have us in a wave 3 of 5? So let me see how high a time frame you're looking at here. Ignore all this. I've got it all shown up on all the time frames. So, but coming out through here, I've got us at at this being a 1, 2, and then 1, 2, 3, 4, working on a 5 of 3. So again, the idea would be this would be a 1, 2, and this would be a 3 and a 4 and then a 5, still finishing up. This is that interior larger 3 here. Let me see. I've got... let me see here. What do we got here as far as... yeah, it's primary, so this should be that intermediate there. Yeah, that interior. So I guess let me kind of throw this on here real quick. So 1, 2, and then that'll be a cycle there. So 1, 2, getting your 3 up here, wherever it happens to be up here as it plays out. 4 on the drop, 5 finishing up still. And I don't know that it's going to go there or higher or whatever. I'm just throwing it in there so you have the idea. So that's what I'm looking at there. I should have a video on gaps. Yeah, I think I've done that before. You'll have to check the, probably be in the tips, tricks, and techniques channel there. I've almost got finally all the, I think I'm up to the last month or month and a half of recent videos, moving all their links into their own channels there. But check the tips, tricks, and techniques, the TTT series channel there. All the links for all the ones we've done over the last almost a year and a half now. Check that and see if they're in there somewhere. I think there's only a few that I don't actually have labeled, so I'll have to go in there and label those as well. But almost all of them are labeled in there. Let me see here. All right, so anyway, it's looking good at the moment here. You know, we've got high volume, you know, a greater effort, less result. Nice doji with a long lower demand wick here off the pivot. And we're getting some confirmation here in a potential bullish engulfing candle. About 9.5 minutes left here on the 1 hour. The 4 hour looks like that right there, which looks pretty as well. So we'll see if we've got that and we can continue that rally up off that for there. You know, again, there's also this count right here, which suggests, you know, again, that maybe we've got an A, a B, and then a C here. So, yeah. So, you know, we'll see how that plays out. The idea, again, is that does it drop below this swing low here, or does it break up above that descending resistance? That's really kind of what you're looking for at the moment. And if it breaks out this descending resistance, then we need to see it confirmed with a breakout above this wave parentheses B over here, up there around 69,000. So yeah, I guess that's the all-time high there. Yeah. Let me see. So let's see here. So that's that. Let's see. Where is my DXY? Here's the DXY. Man, look at that beautiful rally coming out of there. You know, importantly, as far as the dollar, you know, as far as this DXY goes and, you know, pivots, rallied up impulsively up through the pivot here. So, you know, again, should be looking for it to continue higher there. Right now, I've got this potentially as a 1, 2, 3, 4. And if so, a breakout above 95.243 will signal that wave 5's in progress up to around the R3 pivot on the H1. It's right there about 95.421. Importantly, you may notice here, we have rallied impulsively above 94.742. That was that point at which we needed. That's that wave 4 over here. That was what we've been talking about. I've been waiting to get through. So, man, that's your first clue that maybe the macro bottom is in here. Maybe. It doesn't guarantee it. But, you know, when you're doing a count, you have 5 down. That breakout above wave 4 is that first clue that maybe that bottom is done there. So you can also notice here that we are above this daily pivot. Let me kind of do this here. Again, look at this. Break up through, retest the pivot, rally right up through the R1 to the R2. Man, I mean, this is a very bullish price action here. We should continue to follow up on that overall. And, you know, we can pull back along the way, but we've broken above this significant resistance that we've had here. See, this is see how they've right here, the same area, the drop here and then the rally here. So we've broken out above that. So, you know, maybe we pull back the R1 pivot and test it and then continue up. Or, you know, again, we're kind of watching that same kind of man where we just kind of continue rallying there. But nonetheless, this should pop on up here 96, potentially 97 at least as it continues up there, I would think. Let's see here. Weekly is just curled back up and overbought here, so we've got room still to go on there. Weekly RSI is almost breaking up there. Again, weekly pivot. You know, importantly, we hit the pivot, rejected, found support at this previous resistance right here, and then rallied up through impulsively back up through that pivot. So again, when trading pivots, this is bullish action right here. So we'll see if we can continue getting that full continued move up there. Here we are again with the monthly here, and so same idea here. You know, above the pivot there. But what you see here with this one, this is what's interesting on this one. So back in September, we closed just above the pivot. And then here in October, we kind of pulled back down here, but ended up closing right around the pivot. And then, of course, this month now, you know, we're rallying back up through there. So showing the, you know, the significance of that pivot right there with it. Like I said, doesn't guarantee that that price is going to continue, you know, that the bottom is definitely in or whatever, but it sure as heck's trying to make a argument for it that it is. Let me see here. If I look at the other one here, let's see. Look at the dollar futures here. So again, this is what we were looking at here. Again, same idea, pulled back. You can see this ascending resistance here. So in this area, it pulls back the resistance, bounce up, drop below, and then breaks out above it, finds support on it, which is just right at that daily pivot. And then, of course, rallies right on up through there. If you want to look at this again as a potential double head, inverted head and shoulders here. So left shoulder, two heads, right shoulder, breakout there. Came back, retested, heading back up. Then the pattern target on that's going to be up here around 98.725. Like I said here, first step in confirming that macro bottom is the breakout above this wave 4 here. This blue swing target, which is this swing right here, swing low to swing high, the target on that's right there at 97.77, which, as you can notice, puts it right up here at the top of this supply cluster here. So, a lot of confluence in that as well. Coming from that, you might have noticed on my other chart that I've got this, let me see here. I've got this kind of, I don't know, where do I have that coming in? I got to go check now. I've got this descending channel right here. Oh, I see what I did. I did the, I think I see what I did. What did I do with this? Okay, so I went from this peak up here, this, whatever this is, end of December 2016 peak, to this, early January low here. And so on this, where do we got my channel? There we go. So this one right here, it's this one right here. And so if we watch this, there's an interesting area of resistance and support right there that we're finding. So, you can watch for a breakout then up over here as well, up in that, again, where that really high volume node is right there. So, again, if we're breaking out, this is this heavy interest area here. So if we zoom out here to, what is this, 2015 or so, so the last 6 years, almost 7 years, most of the interest has been up here around this 97.5 kind of area. But it's really kind of from down here at 93 up there to about 97.5. If we're popping above that 97.5, this becomes a floor here. This becomes a support in that area, which again, works for that higher out. So, as we'll continue to watch this, if we can get up to these higher targets here, that puts us above that high volume node, which means, again, that is the area most interested in over the last almost 7 years now. So getting above it means that the market's going to be interested in supporting price at that point. Until then, they're trying to push it out. They're still going to be giving resistance here, selling into it. But again, that breakout above that should convince them to then, because the market itself is interested in that level or below or above. So breaking out above that, the market should then be providing support around that level there, opening up the move for higher there off that. Let me see here. And if we look at the Euro USD, guys, I mean, that's the big thing, right? So again, for those of you that are new, I always talk about this. The DXY is really just the inverse of the Euro USD because the DXY is a weighted index, and most of the weight goes to the Euro USD. About 58% of the value of the weighted value of the DXY is that Euro USD value. Next is the USD yen, which is about 12 or 13%. After that, you got a couple of small, 4.5% or whatever. When you're looking at like the USD Swissy, you're looking at USD cable, you're looking at the Loonie USD or the USD Loonie. They have the smaller percentages in there. So if you want to look at this another way, let me see if I've got one for the newsletter. I think I put it in the newsletter at one point, maybe not. No, I didn't. Okay, so let's do this right here. You know what? Let me get one that doesn't have anything on it so it's easier to see this. Let me just do this. What's today, 12th? Okay. Let's see here. Not in the crypto. Let's get out of there. There we go. All right. I think Atlanta's got the volume. Nope, they don't. Well, I don't really need the volume. We just look at this as it is right here. We're just looking at structure here. But, you know, I recently warned about this right here, right? So you've got this area here. This is the daily here. You've got this area right here. And so, you know, again, it was over here, pulled in, pulled out. We create, you know, again, we kind of said, yeah, that's the area there. Dropped down to it, rejected at it. Strong rally, strong drop back below. I think last time we were talking about this, we were right around here, end of last month, beginning of this month, because we were talking about the daily pivot and how the drop down below the daily pivot would be the clue that, hey, you know, it's probably headed lower. So it dropped down, it went up, rejected the pivot, dropped down through the S1, trying to find support above the S2. Not a whole lot of positive action there for the Euro USD when you're looking here at this daily chart. So, you know, again, the same thing we were already talking about and looking at. I'm trying to think what else we can look at here as far as this goes. I don't think that's going to do us any good there. Yeah, it's just a breakdown there. I mean, you know, if you're looking at this as a reversal off this end here, you know, what you have here basically is probably a 1-2 here. And so if that's a 1-2, you know, this is kind of just the opposite of what we're looking at there with the DXY. You know, that gives you this target down here of 1.22226 generally. 1.2226, that's it. Had one too many numbers in there. And so, you know, again, that's kind of where you'd be looking at it generally. But then, of course, you'd want to look at what's going on in here and how that's all coming up. You know, as far as what you've got coming down here. Again, you've got a swing low here, rally up, rejected at the swing high area, comes back down below that swing low, rallies back up, it's rejected at that swing low area, and drops back on down. So, yeah. But, yeah, so, you know, we've got, you know, the same as the DXY. You know, again, when I talked about the DXY here, let me find my other chart. Oh. Is it 4 hour? Where did I have that? Basically, I was talking about this right here, right? So this area right here. And how that was the resistance that we just punched through. And so the Euro USD has that same area, kind of right in this area here, where it's stuck in at the moment. So we'll see how it turns out. The weekly has not quite dropped into oversold yet. Again, dropping below the weekly pivot. These are very important pivots to make note of here. So we can look and we go, okay, well, where is the relevant support, right? So if we look left here, see this right here? That's your most relevant support right there. Coming down. That's where you have it all from all the way back over here, you know, again, coming back here 6-7 years. Resistance, right here, support, resistance, support, and then up and then boom, and, you know, down through it there. Now, what concerns me, well, so here's the thing. You had this strong rally up through it originally, right? Then it pulls back and finds support on it, continues up. Now, what happens when it comes back down? It doesn't just drop through it. If it was just to drop through how we just rallied up through here, just to drop through like that, I would expect to see another strong rally back up through it. Instead, what it does is it gets here, you know, right below this area here, and it creates this sideways. It creates this ceiling here before it continues lower. Usually we look for it the other way where it creates a base, right? That's usually what we look for, right? Where it creates that base, and then it springs off that, continues up. In this case here, it's kind of creating the ceiling here. That doesn't mean it can't rally up through it, but it means it's going to be much more difficult in this area. There are people who are staking their shorts here. Their shorts. And so, when I look at this and I see that the weekly RSI is this close, it's about what? Right around 33. So it's pretty close to that 30 level. I would generally expect it most of the time to follow through. Now, it doesn't always, but most of the time you would expect it to follow through. So, when I'm looking at that, I'm thinking maybe they might head lower there, but look at this. So the last time it was that, near that area, as it was declining, was this right here. And that was this right here. And so it got a bit of a rally and then came on back down. So again, could see a bit of a rally. But I would expect it to remain below this pivot here, below this weekly pivot, if it were to rally up and then kind of follow through the same way here as it goes down. But nonetheless, that's our big level we're kind of watching there. There's a decent kind of level right about here. Let me see here. Yeah, probably, I'll give it a range here. Probably about that area right there. More or less there. That's where it's in right now. More or less that kind of area. So again, a breakdown through that. If we break down through that, I think we'll probably get toward these lows down here about 112. And then it'll rally back up and get rejected here. So if, I think maybe we might see something like this, and then it'll come down, and it'll come up, and then, maybe continue coming down like that. Now, it could still break up and just get up, but, again, this resistance here, if you're losing that the same way as this one right here, you generally kind of expect that to work as resistance until it doesn't anymore. So, yeah. Let me see here. Let me kind of catching it here. Let me just kind of catch up with you guys here. Sorry about that. I'm just trying to see where you all are at here. These idiots always coming on here. Want to become famous? Buy followers. How does that make you famous? These algorithms know better. Idiots. Let me see here. Hank thinks that the euro is going down the mid-80s. See, the funny thing about this is if it doesn't, Hank can go, oh, well, you're the expert. I didn't know. But then, again, I think we're probably headed up higher. Again, that's been my thesis since we've been down in January. I've been right so far. So a lot of money to be made on that. But, again, nowhere have I said it's definitely going. I keep warning you guys that, there are levels we have to get through. We finally hit the first one, which was that 94.72 area. And so, that's just your initial indication that maybe that macro bottom is in. When you look at the bigger picture. But we definitely still need to see some further upside with that. So we'll see what goes on there. Let me see here. Brian, what's up? He says, new company name, Puerto Rico West Capital. Yeah. Oh, my gosh, man, guys. I'll tell you what. I was looking at that infrastructure bill and those new crypto regulations on there. And, man, I think I've had it. I've kind of, joked around a little bit about Puerto Rico and other countries and whatever, moving there. But, man, I'm really not liking what I'm seeing coming out of Washington right now. And so you guys might be seeing me streaming from Puerto Rico before too much longer, sometime next year. I'm looking at it right now, so I'm doing my research on it, seeing if, more than what I've done already, seeing if it's really somewhere where I want to be. But, hey, you can spend 90 days in the U.S. It's like a 183 day requirement, basically. You spend 90 days in the U.S., but of that 183 you're supposed to spend on the island, you can spend 30 days also overseas somewhere. So I could come visit you fine folks over in the UK or something for a bit if I wanted to. Maybe put on a local training or something. That might be something cool to do. A few places, the UK and a few other places where you guys are clustered. But anyway, yeah, really consider that, man. That's I don't like this stuff coming out of Washington right now, guys. As far as, it's already difficult enough to report your crypto trading, and you're already really limited with where you can trade. With Puerto Rico being a U.S. territory but not a U.S. state, it has its own tax code and whatnot there, and so the tax savings are just insane of what it could be. Allows for much greater trading and whatnot with all that. So yeah, thinking about it. Let's see here. Hank says Euro is at major support. That is the most relevant. He's got a chart here. Let's see what Hank's got. Let's see here. He's got this right here. Is that what we're looking at? I think it's probably the same thing I just drew on there, right? Yeah, same idea. Hank, you're looking same idea that I'm looking at there with yours. Again, noting that I think this is the weekly here, right? Let me see. Oh, I think it's the weekly chart. But anyway, noting again the fact that the weekly RSI is almost oversold. It's come close before again, right in here, which went up, but this was sideways right over here, in which case it rallied up and came down a strong bit down here. And so, again, if we continue to look at it there, what am I saying here? Oh, over here where it came, where it actually dipped low and went really far below, so a long, big move down. So this alone, of course, obviously is not enough to say, oh, it's definitely this is the place where it's got to rally, because again, it's dropped well below before, taking it much lower there. But it is an area, as I noted on mine, and as Hank's noting here, it is the area to watch right now. And so if we do get a rally out of that, my first, thought is to watch this kind of area up here around 116 and some change there. And if it gets rejected in that area, I would even say potentially even, this swing high in this area here, this swing high up here, give it a range. It's 116.923. So, kind of this range right here, if it rallies back up and is rejected there and comes down below this swing low, we should be looking for it then to continue on lower as it does there. But again, could rally up out here and head up. So we'll see. Hank says if that breaks, we have different problems. I wouldn't call it a problem. Then again, I'm long dollars, so it's all on how you view it, right? And tell you right, he says, I'm tired of these problems. I would like different ones. Oh my gosh. Just in time saying the Litecoin long looking juicy again. Bitcoin wants to push out of here. Yeah, and so, not too long ago, guys, I gave you in the what's it called? The newsletter. And then, of course, I showed you, I think after that here on stream, I gave you this Litecoin USD chart from the beginning of the month. Let me see here. Look at how that thing's rallied, guys. From back here, rallied all the way up there. I hope you guys were paying attention. Maybe went long there. It's up about 35% so far. And looks like it's still really, you got tons of room still to go here on the weekly. So I think even if it pulls back a little bit here, we get a breakout, which gives us a target at descending resistance. Breakout of there gives us this pattern target. Up there about, there we go, 0.013766620, around that, about 260% rally there. At that point, I think we should continue up above the range highs here. So that breakout then leads to a target of about 0.040979 kind of area. And if it continues up through there, of course, we'll be looking up here at around 0.097373321 if it gets up there. So just some big, longer term, larger targets there. But this does look a lot like a accumulation in this area here. You can see the volume's picked up down here at this area compared to what it was. You got a lot of, as it dropped here, a lot of decrease in volume, not a lot of interest. Picks up in this area, starts building up again. Same thing we kind of had here. So kind of suggesting that we should probably continue heading up after this short little dip that it had right below the range lows there. So yeah, let's see here. And here's that Litecoin one right now. This is the weekly on the Litecoin. So as you can see, we rallied back up here to the R5, pulled back to the pivot, rallying back up here. So low, high, higher low, higher high. So bullish market structure coming off midsummer here. Coming up off that. But much, there's your large channel kind of thing going at. So if you're getting this breakout above that channel resistance, you should probably be looking toward the channel or the channel EQ. Usually that means channel resistance. You've got the swing high. As you can see here, you've got that all-time high there, followed by right about here. So you've got this resistance. You break out above this, and it's all it's off to the races then, right? As you do that, I mean, this right here would be a 1, 2, and so heading up off there. Much more potential upside off that. Coming off there. So anyway, yeah, Litecoin's still looking kind of good. But when I told you guys about this one, I said, you know what? I said this might be the chart that catches people off guards. Because everybody's like, oh, what is Litecoin? It's worthless. Why are people still? Is it still a thing? People just kind of being people. Just being emotional about it rather than paying attention to what the charts are saying. Now, you know me. I won't charge, I won't trade Craig Wright coins just as a matter of principle, right? Because I don't like him. It's with everything else, it's gone up, right? So there's money to be made on it. But I recognize that I'm saying it just because of how I feel about him. So, I guess you got to pick your battles out there, right? Let me see here. Blaze, let's us says we have to find our crypto citadel before it's too late, right? Right. Thing is, you can't take your crypto profits to PR. Yeah, I know. I'd have to. That's what I'm looking at right now. How do I do that? Because if you buy something and then you move there, and now there's different regulations on that about how long it goes and how far out it is before you actually claim those profits. I think there's like a 5-year window. If you move to Puerto Rico and then you cash out 5 years before you've been there for 5 years, you've still got to pay U.S. capital gains. But if it's after 5 years, you pay Puerto Rico gains, which is like 5% or something like that, under Article 22 or 60 or whatever it is these days. So yeah, there's a lot of this I still got to do. I got to meet with a lawyer. You get all this really kind of ironed out. But it's I'm going to take the hit right here. But if this, again, guys, I was talking about this prior to this bull market during the last bear market in 2018, and I said, this. If you guys were following back then, you remember I said that this was the one in which I said we'd probably see central banks coming out with their coins. I said this would be the final kind of like early get in kind of phase here. And so if all this is correct, then after the next bear market, we should really have a good bull market after that. And so, you take the hit right now, you pay your taxes on your crypto right now, just to get the heck out of Dodge. And then you get over there, and then you buy again over there, and then there you go, right? So, you buy during the bear market, you buy there, and then just kind of hold them until it kind of goes up there, right? Same thing we do all the time. Let's see here. Brian Allen, what's up? He says, glad to be back on for a little bit. Been slammed to getting all my loose ends together before traveling to Romania. Man, I've missed y'all. Really? You're going to Romania? That's pretty awesome. Go say hi to Teo out there. That'd be awesome, man. You guys need to kind of get together and snap a picture and share it. Tell your writer's still pushing for the Tier 4 Puerto Rico TWC resort type thing membership. Oh, man, that's funny. That's funny. Let me see here. Let me see here. Yeah, we'll see, Hank, man. We'll see what happens there with that, if it jumps on down there or not. Again, the DXY guys, I have my feelings about how I think it's going to go. But, again, this is always with these other confirmations along the way. If you guys are paying attention, I always talk about confirmations and validation levels and invalidation levels. And these things are so very important, which is why I talk about them all the time. We've got possible targets, but, until price actually hits those targets, it's still possible it comes back, right? So, we may still get to the mid-80s or even lower. What's going on. But when I look at the macro side of things on top of the charts, if I look at the macro side of things, and again, taking us back to the CPI number this past week and how that's a 30-year high, why did the dollar shoot up? They shot up because with that happening, not because the inflation was high, so we got to buy, but it's because of what that potentially means, which is the Fed's going to, the Fed, the market's kind of forcing the Fed's hand to raise rates sooner than what the Fed has been saying they want to. And that's what it is. Because remember, guys, when it comes to currencies, the country that has the greater interest rate is going to have the more, the stronger currency. People are going to want to go to that currency because they get more return from loaning that money out. It's a higher rate of return, right? A higher interest rate. And so that, again, when you're looking in terms of that, that's a lot of what plays into the strength of your currency. So, if you take the dollar against the euro, for instance, and the euro's got a 2.5% interest rate, and the dollar's only got a 1% interest rate, then necessarily we're going to expect that the euro is going to be a stronger currency to be in than the dollar. Now, if the dollar were to ratchet up to 2.75 or 3%, now they're higher than the euro, and so people are going to want to get out of the euro and get into the dollar. In general. So again, it's not that the CPI number was high. That the reason why the dollar ran up, it was because of what that CPI number means in terms of what the Fed is going to do, or what is people are assuming, the market's assuming the Fed is going to have to do. And if that's the case, if things are where they are there, start raising those interest rates. Yeah, it makes the dollar stronger. You would expect it to. Again, the only thing that would change that, because the euro is 58% of this weighted value, is if the euro were also to start raising its interest rate as well. But for Lagarde's part, being very much anti-raising rates, anti-tapering, says, we may wind down these purchases, but we're going to increase these purchases, and so, really kind of worried about it over there. They are. But even the market over there is still trying to expect that the ECB is going to raise rates a few times more than what they are saying they're going to. That maybe Lagarde is just a bunch of talk, and she's going to be they're going to be forced to do that. So, yeah, a lot of fun stuff, right? Expensive USD is not good for the U.S. economy. If you're talking about in terms of debt, and any expensive currency is not good for it's not good for debt, okay? And all, westernized countries these days are debt-based economies. So you want a weakening, you want inflation, you need inflation of a small bit. Because what you're doing when you have a debt-based economy, everything's fine as long as that inflation continues. Because you're paying your today's debt with cheaper future dollars. But when your interest rates rise, it makes your, in this case dollars, more expensive, and more valuable. Well, now you're paying that debt with more expensive dollars. And so when you do that, especially if you're a company, that means you can't expand like you want to. You can't hire like you want to. You may, depending on how bad it gets, you may have to lay off some of your workforce. Yeah, because all of a sudden more of your company's money has to go toward servicing the debt. And this is really important to think about, because if you look at this ratcheting up of corporate debt over the last almost 2 years now, right? If we look at that and the economy turns around and comes back down, so now you got all these companies that have all this corporate debt out there that they have to service now with more expensive dollars. And so that is going to put a lot of downward pressure on those companies. Again, potentially leading to shrinking, to laying off some of their workforce and whatnot. We talk about this great resignation, but the fact is, what happens when they have to work? and they don't all of a sudden have jobs to go to. Imagine this. Imagine you're a person today who has felt pretty good about the economy because of what's going on over the last year and a half, and maybe you're making a few bucks in crypto or stocks or something, right? And you're feeling pretty good about yourself, and you said, you know what? I'm going to take a chance and I'm going to leave my job and I'm going to look for a better job, or I'm going to look for a different job and something different that I want to do. And so you leave your job. And now you're out there trying to find that job, right? Or maybe you're just kind of being lazy about it. You're like, I'm going to take some time off. I'm going to chillax for a bit, And then all of a sudden, because, slowly at first, and then all of a sudden, right? All of a sudden, the economy turns down. Businesses start having to ratcheting down. All of a sudden, all these openings that were here are no longer there. All these higher pays that were there are no longer there. And now you're scrambling to fight against others who are maybe more qualified for those positions than you are. And you were paper rich. You never locked in your profits, really, or locked in very few of your profits. Or maybe you locked in some profits and you keep thinking the market's going to go up, so you keep buying every dip and it keeps going down further and you're losing money. I mean, when I talk about what's potentially coming up, this is what I'm talking about. Now, there's nothing here that guarantees this is what's going to happen, but this is how all these little parts all kind of play into it to create this bigger thing that you need to be concerned about. That's kind of where we get at. So yeah. Crypto Girl said she was there in 2018. She was. When I was originally on YouTube, said, you were right on regarding markets and regulations, etc. Yeah. I mean, again, as I said, for those that were here, Hank was here at that time, so he knows, and a few others, again, everything that's happening so far is not really a surprise. Again, I've mentioned, I thought the downturn would happen sooner. It's taking a little bit it's taking a little bit longer to happen. That's fine. We're talking about a huge 233 year type cycle. So, I'm not overly concerned about that. I've obviously never said, listen, that's the end. We're done. Go sell everything. Go short. Go whatever. I've talked about, listen, here's what we're looking at. We hit that. It starts coming back. Okay, well, here's what we have to get through. And here's what we have to get through. We don't get through it. We continue up. Guess what? It goes up next time. We just kind of work with it as it moves. So, again, guys, something I always tell you about, even if you're concerned that the market may turn down or something, that doesn't mean you can't play the market. You can't still go long. It just means just be understanding of where you're at in terms of that market. Where are you really at? Don't lie to yourself. Don't tell yourself, oh yeah, this is the beginning of the roaring 20s now. We've got 10 more years of this. No, don't go telling yourself that. Take it day by day, week by week. And shorter term targets, lock in profits, get done, pull back, buy in again, ride it up, lock in targets or lock in profits. Again, that's what it means to trade, guys. Consistently locking in those profits, not grabbing the bottom and the tops. Those are ridiculous. It's ridiculous to try. You'll rarely ever get close to it. And by close, I mean, within a few points or a few dollars or whatever. So it's much easier, a lot less stressful to just grab along the way, something along the way. Don't worry about buying here and selling up here. Just make sure you're locking in some profit here and here. And here, you do that, you're going to get where you want to go. All right. Let me see here. Let's see. So Crypto Girl, I think, was wanting to look at SHIB, right? Let me pull up SHIB here. Let's see where we're at. I haven't looked at it here since I drew this, other than to notice it pulled back. Oh yeah, look at that. Let me see here. Okay, so we got, if I'm looking at this here on this 4 hour here, 1, 2, 3. I was looking for a potential pullback to 2 there. Let me kind of change this chart here real quick, make a copy of it. Again, the one thing I don't do, guys, is hide charts and change charts to make it look like I was always right or anything. You guys don't get anything out of that. I know some of you all been with people, groups, where they do that kind of stuff. But, my goal here is to make you guys understand what it really means to be a trader and how it all really works. Not to, again, as I always say, blow smoke up your rear end, right? Let me see here. So we've got this descending resistance here. We've got this breakout and this pullback to it. Let's see here. This ended up not being wave 2 here. Okay. Potentially. Man, I don't know. I'm not overly excited about it at the moment here. See if I zoom in a little bit more, see what's going on here. See, we've got 3 down right here. And so the way I get this 1 here is I've got a 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5, 5. So that's how I've got the 1 there, in case you guys were wondering. It didn't look like it on the larger time frame, but here again, 1, 2, 3, 4, 5 is how I have 1 there. So what I'm going to look at now is the possibility that this may be done. But let's see here. Actually, let me jump in this local area here. Yeah, see right here. Again, it looks like a 1, 2, 3 or an ABC on the other one, but if we look here, looks like we got a leading diagonal. 1, 2, 3, 4, 5 potentially. 56.98, 56.70. So then potentially an A, a B, and then 1, 2, 3, 4, 5 here. So that may be, you know, a 1, 2 done. That pullback right there, if that's it, it's right there around 50%. So pretty solid. So locally here, if we can go and get a rally from where we're at there, let's see, how do we want to do this? Just kind of see where we got these lines here. Yeah, I think that's probably a pretty good kind of channel here. Kind of got this thing going on. That'll give us a third wave up here at 70.63. So yeah, so things I'm looking at locally here is I'm looking for a breakout above this channel resistance. You've got supply right here you're going to have to get through. But if we're breaking out here, I'm looking for it to target this channel resistance here through the EQ to the channel resistance. Break out above that resistance. Pattern target of 474 above the point of, you know, whatever that is, 0, 0. I don't know. I can't tell how many zeros are there. 1, 2, 3, 4 zeros. And 474. Would be the pattern target based on that. That takes you above the swing high there. In that case, you know, if this is a 1, 2, and a 3, then your 3's up here at around 70.63. If this is only an ABC on the way, well, then you know, the first target you want to see is you want to see price getting through 63.36 here. At 63.36, right here. If this is an A and this is a B, then 63.36 is where C equals A. So if we get above that, then we'll kind of look up here to 70.63, and then that'll give us more of an idea that maybe we got a 1, 2, 3 going on there. So, you know, the rally continuing up from there would say that this is a 1, 2 and done here, which means this larger 1, 2, 3 heading up gives you a third wave target up here of around 82.12. So that's just what I'd look at there, guys, as it plays up there. And, you know, if you're getting up there, you're definitely kind of putting in the, you know, the likelihood that you're correct. Now look at that. The breakout of this descending channel. See if I can get this back up here correctly. Looks like we've got a pattern target up here just about that wave 3 target, right up there around that 82.12 kind of area up here. So that's what I'll be looking for. The only thing that changes all that is if we drop down below wave 2 here at 4,600. If you drop down below that, that invalidates it. But as long as we kind of continue up from where we are here, this is the low here, and we continue up, those are our targets and how I'd watch it as it's rallying up there. So yeah. Let me see here. Somebody else was asking for something. Could you take a look at... Really? You're going to get me to look at 2 charts? I don't know. Maybe I'll look at 1. Would you rather me look at CROU USD or BTC? Andy, let me know. Let me see here. Blaze, what's up? He says, are there other indexes heavily weighted like DXY? Yeah, a lot of your indexes out there will be weighted indexes. You'll just have to look to find which ones they are for sure. But you can type into like Google or some weighted indexes or something like that. And it'll give you the list of indexes that are weighted. I'm at the top of my head, I can't think of anyone right off other than DXY, but I know there's others out there. Let me see here. Crypto Girl says, I heard from others concerns regarding Washington regulations. When do you think the regulations will go into effect? Do you think there will be an exit out of crypto into USD, gold, etc.? So the regulations that I was talking about that are in the infrastructure bill that was passed and Biden says he's going to sign, these regulations go into effect in 2024, I believe. Yeah. So they're going to apply to your 2023 tax year. So the 2024 tax year. So what's happening in 2023 that you have to pay taxes on in 2024? Maybe that's what it is. Maybe they go into effect 2023 and they'll affect your taxes that you have to pay in 2024. That's it. So they don't affect us for this year coming up for 2022. But again, they'll affect what happens during 2023, and so the taxes you have to pay in 2024. That's when they will actually go into effect. Do I think you're going to see a lot of exit? I don't think that's going to do it. I think most people are just kind of dealing with it. Like, oh God, I got to do it, whatever, I'm going to do it. Because most people aren't willing to, make that move to Puerto Rico, right? Here in the U.S. They're if you're not used to making moves, then it becomes, potentially an issue. But, for somebody like me who's moved basically my entire life, from when I was born till now, it's not a big deal for me to pack up and kind of move on. So that's why, but I talk about it so openly and freely. It's not a big deal for me. But for many others that don't have that haven't grown up that way, to move even to a U.S. territory. By the way, other U.S. territories are Guam, things like that as well. But, people, it's a different kind of culture. I'm actually excited about that part of it, check out some areas there and some of the culture there. But, and for a lot of people, it's island life. That's different than these big cities that people are used to living in and suburbs and stuff like that. Like I said, I don't know necessarily that those regulations are going to cause any kind of big move out of the U.S. I think it'll likely affect more of the maybe funds, maybe like hedge funds and stuff like that. They may have more of a reason to move out than your average Joe. Average Joe will just kind of... Either they'll think they can lie about it and hide it and then they'll get caught, or they'll just, suck it up and deal with it. I'm tired of sucking it up, honestly. I'm tired of dealing with it. A lot of my trading when it goes to crypto depends on what the regulations are, and what they currently are and where they may be going has limited how much I'd like to trade in it. So just because it's just so difficult to keep up with. Even with these other services, there's still things that they miss and still things that go on, and it's just a big old cluster. Well, anyway, there. So, yeah. Let's go for USD there, Andy. Which one was it? CLO USD. Was that what it was? Oh, CRO. Okay. So, USD. Okay. Let's see what we've got here. Man, such a small chart. So the one thing I like is all this sideways here, volume's dropping off. So likely, just looking at that right there, increases the odds significantly. This is probably reaccumulation here. What's going on, Mark? You are late, buddy, but good to see you checking in anyway. Crypto Girl says she's also tired of how uneducated those in power are about cryptos. It's about everything, guys. One of the things we talked about when I was in law school, and we talked about the Supreme Court, was how they would, they're generally made up. They've always been kind of these older judges who don't have a lot of experience with technology, and how because of that they would often not take on cases that involve a lot of new technology because they didn't really understand it. We looked at some of the cases that they have done with technology, and the things they've written, and it was just like, it was embarrassing to read it because they clearly had no choice, had no clue about pagers and email and stuff like that. And the same thing has just continued on through today. Some of those cases weren't too that long ago. So it's not just people in power as far as Washington, but it's just people in these, I guess, positions of power. These people that can really make life difficult for us, not really having a clue. Yeah, but it goes all the way up to the Supreme Court. It is what we're going to do there, right? I don't want to check all the history right here, man. Look, this is good. This is going up. let me look at what you're talking about there. Crow USDT. All right, let's change this. Crow USDT on KuCoin. There we go. Let's see. So yeah, again, same idea here. Reaccumulation. You see that volume drops off there, picks up on the breakout here. So yeah, reaccumulation happening here. We're rallying up. This should just be a temporary pullback. We should rally up higher there. Let me see here. Let's see. See what we're looking at here. So, let's see here. There we go. This looks like, I don't know. That looks kind of like a diagonal here. Let me kind of zoom in a bit for a moment here. I don't know, maybe not. Maybe. Let me see here. So we get 1. So 1, 2, 1, 2. So 1, 2, 3, 4, 5. 1, 2, 3. Yeah, I mean, it looks like 4. It looks like a leading diagonal off here. Coming off here. So 1, 2, 3, 4. Yeah, for a 5 there. Probably, around that that ascending channel resistance there. Maybe even 83.21 up here on a stretch. Locally here. 1, 2, 3, 4. 1, 2, 3, 4. 1, 2, 3, 4, 5. I don't know, make it closer. Let me see. Let me try that again here. We might actually have that lower target. I actually have a target closer to 43.74. Or 47.34, I'm sorry. Yeah, because again, if I'm looking at this, it looks to me like a 1, 2, 3, 4 here. Get over here. There we go. What the heck? There it is. 2, 3, 4. And then locally here, 2, 4, 5. And then interior to that. Take it down another one. Man, I hate the way... I hate that TradingView decides to use larger and larger degrees there, you know, making the actual labels larger and larger. It drives me nuts trying to get something clean looking at it. Because when you're looking at like this here and trying to show what's going on here, you know, as large as they are, it ends up getting really messy and just, Let's see here. There we go. So something like this. It could be a 3, 4 like that with the 5 coming up here. Yeah, it looks like it'll be right there, maybe 4,900. So my immediate thought is this right here. Potentially a rally up here toward 47.34 to 4,900. Which is based on this right here. As a leading diagonal. Let me make sure here. Because wave 5 should be larger than wave 3. Since wave 3 is larger than wave 1, it's an expanding. Yeah, see. That'll get you right up in that 1.4 area of wave 3. So... you know, as far as an expanding diagonal goes, you know, wave 1, wave 3 is larger than wave 1, and wave 5 is larger than wave 3. Again, looking for that possible target up in there. You see here. So yeah, if I look at this, I go, okay, so 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. So that probably gets it clean there. So not really looking at a flat here for this wave 4 here. ABC, ABC, and then down. 1, 2, 3, 4, 5, A, B, C right here. Nope. Missed that up, didn't I? Yeah, it's intermediate. Hit the wrong one. There we go. So what I'd be looking for is a breakout above wave B here. 36.55. Actually, you know what? Let me zoom in more. Is that a triangle? No, it's just ABC. ABC, this is it here. Okay. So this is probably actually a, this is going to be a WXY actually. Because it's threes with this here. So you go 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, A, B, C right here. A, B, C for W, and then A, B, C for X, and then A, B, C for Y. And so we're looking for a breakout here above above wave X here, wave X resistance, 36.55. And so that's what I'm going to look for on a breakout of that to kind of add confidence to this count here. And then we'll be looking for a target of 47.34 to 4900 as far as that goes there. So yeah. So that's what I'm looking at. Let me see here. Tell you saw something about Portugal on Twitter. You can send me the picture. I'll check it out, man. Yeah, a lot of stuff going on with Portugal as well. But, to go to Portugal, great crypto regulations there, or, great tax implications there for us in Portugal. But you have to give up your U.S. citizenship, you wouldn't be a U.S. citizen to get that. You have to be a citizen of Portugal. And with Puerto Rico, I get the same basic benefits of tax benefits there, but I don't have to be, I don't have to lose my U.S. citizenship. And so, that's something important. Yeah. Andy, you're welcome. Yeah, especially important for me because, I've got a young son and, he still sees his mom, so it makes it easier just to retain U.S. citizenship. Now later, who knows? Later down the road, I don't have a problem heading somewhere else if I need to. Sure. It's all about that. It's all about the taxes right now. By the way, this is a chart here. This is Pyre USDT here. So Vulcan Forged Pyre against Tether. Our friend Crypto ISO asked a question there on Twitter about this. He was wondering if this bull flag was probably a bull flag or if we're going to head lower. So I chimed in on it. My thoughts are we're getting a rally here. We're finding support on the daily pivot here. Daily Stoke RSI is almost bottom out and oversold. So what I'm looking for, I think it may be, and I'm looking for a breakout of this descending resistance. And if we get that, I'm looking for a local target of 31.52 on that breakout. So that's where I'm kind of looking for this to go. So if you're interested in that particular chart, there you go. That's what I'm kind of looking at the moment here. Overall, I think it goes higher. I think this is just the beginning. But I think we get up here and we kind of pull back and then we head up again. So, if we get that breakout, like I think we might, we head up there, we kind of pull back, and then we break out and head higher. I think is what we'll be looking for with that. Yeah, you're welcome, Crypto Girl. Always, always. Let me see here. Mark, you and the wife are considering moving to Portugal, to one of the islands, São Miguel. Hey, man, if you do, keep up with me, man. Let me know how it is. Again, who knows? I might continue to just move on out that way at some point. Right now, like I said, definitely makes it easier for me with everything to stay, within like Puerto Rico or something. But yeah, who knows, man? I'm getting old. I might just retire on the beach there in Portugal. Let me see here. You keep seeing the island coming up on Wheel of Fortune, and you wonder if Hank is there. That's good stuff. Let me see here. Can I look at C98 USDT? Yeah. And then I'm going to have to go, guys. Let's see here. C98. All right. I don't know if KuCoin's got a better chart. Nah, pretty much same thing. All right. So if I'm looking at this, again, a lot of sideways, a lot of very low volume. This is the daily. We're dipping down into oversold here. Let me see here. There we go. So there's my range. Yeah, so short bit of distribution, some redistribution here, selling climax. ST and phase B maybe, which is up here. Structurally, we're getting higher highs. We're now higher than the range over here. We're finding support right around the EQ of the range, the pivot level there. So yeah, I mean, I think we're probably headed up. What I want to see is a breakout above this swing high. Right here. So that's right there at $46.44, $4.64.4. And so if we can get a breakout above that, I think we're good to go higher here. Locally, that'll give us a pattern target right around $1.06 or so above the breakout of the range here. So that gets you right up into the supply structure right here in the wick around that all-time high. So that'll get you near the EQ of that, which is what we usually look for. So, yeah. I think if we can get this breakout here, I think we've got a minimum target here of the R3 pivot kind of area on the daily. We might pull back and then head up from there. Let me see here. Yeah, because we don't have any, we don't have the jump across the creek yet here. So our resistance, our supply is still here. And so generally what we expect is high volume, large candle spread through that, pull back up the edge of the creek here to that resistance, return support, and then break out higher. So, you know, this is what I'm kind of looking for. I'm looking for a breakout above that swing high right there at 46.44, 4.644. If we can get that, I think we rally up here to around the R3 pivot on the daily, which is right up there around 5.935, 5.99. So 5.93 to 5.99 kind of area. And then I think we pull back to this resistance here toward the top of the range here. But what I'm going to look for is on this breakout here, I want to see large candle spread, large spike of volume comparatively. And that'll let us know that's the jump across the creek. This will be a show of strength. It'll pull back up the edge of the creek. That resistance, and then you'll break out for another show of strength higher. Have a great weekend, Crypto Girl. Thanks for showing up. So yeah, that's what I think we got going there. If this continues to break down though below this the swing low over here, I think, you know, it's possible we could head on down toward, you know, 175 here at this bit of this high volume node, or the S3 pivot there. But right now, it looks like it may be accumulation happening there. So we're looking for that breakout on a spike of volume and larger candle spread through that. Probably tag the supply EQ, pull back to the resistance as support, and then head up from off that. All right. There you go, guys. It's been a great time here. I really appreciate you guys showing up. As always, the only thing you control in the market is how much you lose. So no matter how good you think something looks or how good it maybe feels, make sure you guys are using confirmations. Make sure you have rational, logical validation and invalidation levels. And don't trade within those. You know, wait till price breaks out. If you do that, you're not going to be trading as often, but you're going to be trading a lot more intelligently, which means your chances for loss are less than what they currently are. And you remember, guys, even if you're using proper risk management, if you're taking trades you shouldn't be taking anyway, yeah, you're going to limit your losses with the risk management, but you're still losing. It's still money you have to make up before you can go further. So always keep that in mind, all right? I appreciate you guys showing up as always. I hope you guys have an absolutely amazing weekend. Don't forget to join in the contest and the drawings there, guys, and share those things and get them out there so other people join in. I'm going to be a bit more cognizant in my verification this time, guys, with the sharing of the tweet. So don't feel like I'm attacking you or something if I'm asking for a little bit more verification after what happened this past week. But, again, it's just to protect you, and it is to protect me, because, we're going to start giving away more and more Bitcoin now. Like I said, next Friday, $1,000 in Bitcoin plus the $250 for just sharing the tweet. So, I mean, realistically, you could win the $1,000 in Bitcoin and also reshare the tweet and win the $250 there. because that's a whole separate thing, the 250. So if you've entered in the other ones and you have a Twitter account, follow me, like that post, and share it. The correct one there. All right? And Mark says, I'm going to be on those giveaways like flies on honey. That's what it's all about, man. All right, guys. Y'all have a great weekend. Discord, I'll see you guys over there in just a bit. All right? Take care, everybody.